Hey guys, TommyBryson here, and how much money exactly should you be investing into crypto, Bitcoin, Ethereum, or some of the more questionable coins out like Dogecoin, SafeMoon, or Shina? Now, in all honesty, I didn't think this was actually real until I did the research, and I watched a video on YouTube where you had this couple that had an amazing income, and they were legit investing 100% of all of their money into just crypto, into just Bitcoin, Ethereum, and some of the questionable coins out there. But I was like, is this for real? Like, investing every single dollar just into crypto. And I also saw a video by Graham Stephan where he said, Tommy, a third of millennials out there, which is mostly us, are invested around 50% into Bitcoin, meaning 33% of us millennials have 50% of our portfolio being just crypto and Bitcoin, okay? So is that a good idea? And if you do want to invest into crypto, how much money exactly should you actually be invested? That is what this video is about. And in this video, I'll give you some rule of thumbs, okay? I'll give you 3 to decide exactly what type of investor you actually want to be. Go all in, 50%, or the smart way to actually do it, which I will get to in the end of this video. But to kind of illustrate something, I kind of came up with this idea, okay guys? So right here, I'm gonna show you something like kind of like how crypto became like this massive thing in a very simple, childlike example. So right here, guys, these right here are always in my background. If you ever saw them, they're always back there in the bookcase, okay? This is from an anime called Death Note, and these are called Funko Pops, okay? And I can actually buy them retail for around $12. Now, the cool thing is that when you have a limited supply of something that has, for example, a lot of demand, you're actually able to sell it for a profit because people are willing to pay more for it. And there's also limited supply, so hey, you wanna grab it as fast as possible, okay? Bitcoin has a limited supply. Follow me. So I can actually sell these for around, right now on eBay, I checked, $200 to $400, all 3 of them. That means if I paid $36 for them, I'm able to make 11 times my money. Now, if you go ahead and you hear the news, Tommy just made 11 times his money on some dolls, well, I want to do that too. So you go out there, you tell your whole neighborhood, and all of a sudden, everyone is getting into the Funko market. What happens then is, again, limited supply, the market explode, prices go up, and now everyone wants to invest, kind of like Bitcoin, right? Now, not just that, follow me here. People also decide to actually make NFTs from these little dolls, meaning non-fungible tokens, meaning, hey, let's make a digital version. And let's make it, for example, from the original manufacturer and also the legit, like Marvels or whatever it is, Disney or this anime, you know, like make it from them, the original people, and make it also limited. So now you have people actually buying the digital versions. A lot of demand out there. But as we know, not every single doll or Funko Pop out there is going to be as valuable. Some is going to make you a lot of money, but some won't. The ones that are most popular out there will make you around $13,000, which is a lot, right? $12, you get $13,000, but that's actually very rare, right? And demand is like super, supply is very tiny, very hard to actually get into it. So why am I telling you this example with dolls? Because kind of like crypto, right? You have this limited thing, right? Scarcity it creates, and you have everyone telling everyone, I made money doing this, so you can get into, and everyone is basically putting money into it, right? Which basically makes the price go up, 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 and that also carries a lot. But when people start to dump their Bitcoin, the supply basically increases, which basically means if you have more supply, less demand, the price is going to drop. So obviously, is it a smart idea to put all your money into Bitcoin? My answer is no. My answer is that's super risky, but I do understand people are putting money into it, and that's why I'm making this video, to help you kind of come up with a plan. If you're gonna do it anyways, how about I help you know exactly how much to actually invest, okay? And by the way, I made around 400, I don't know, it was actually like around 500% on my like Bitcoin investment, not an investment, it was an experiment, but I'll tell you more about that later in this video. But for right now, smash the like button if this makes sense and actually help you understand. And on top of that, also if you're new here, subscribe and hit the bell to get notified, especially if you like anime, although I only make money videos, okay? So don't expect any anime videos in this channel. But the first thing I want to say, guys, the first style when it comes to investing into crypto is the style that I'm either all in or I'm out. So this couple I actually found on YouTube, I won't say their name because I don't want that type of attention or any of that stuff, and I don't want any drama. But if you want to know who they are, go subscribe to my other channel called the TommyBryson Show, because I will post it over there. It's a small channel, so I kind of like the drama over there, but I keep this one here more PG friendly or whatever. But overall, this couple makes a good amount of money, and they invest 100% of all of their money into crypto, Ethereum, and for example, Bitcoin, and they also invest every single month $5,000. All of their money for investing goes straight into crypto. Now, obviously, this is either stupid or it's a genius move if you made money. If you didn't make money, it's like, oh, you're so stupid, right? But because people are making money right now, apparently everyone is a genius as far as when it comes to crypto. Now, this means, for example, this couple, by doing this is what happened, guys, okay? I did some research and I found out they've been doing it for around a year. And they started, for example, last year, November of 2020, and they invested so far $60,000. That's almost a 360% gain, which would actually put them at around $216,040.91 is how much they actually have in total. Which makes you think, wow, these people must be geniuses, because that is awesome. And that's a cool thing, right? When you go all in, you make a lot of money or you lose it all. And that's a big risk. Now, this means, for example, if things continue to go as they are and they keep investing that 5K per month over the next 5 years and make the same return, guess what happens? That turns into around $157 million, $828,281.60 just in 5 years by having a 360% return. And if that happens, that's amazing. But likelihood is actually pretty low. You might say, Tommy, well, that's not accurate because obviously the price is going to stabilize at one point, but no. Right now, we haven't peaked really anything in Bitcoin if Bitcoin does become exactly what it's gonna be, you know, the total currency of the entire world. If that does happen, for example, it is going to blow up. And over the next 5 years, this is pretty possible, right? But my point is to say that if that does happen, they made a lot of money. If it doesn't happen, they lost nearly all their money. And that's the big risk when you go all in. So do I recommend you put all your money into Bitcoin? The answer is no. Even when it comes to stocks, I don't recommend you put all your money into one stock. I recommend you diversify. So invest into index funds, do dollar cost average, and also, for example, rebalance your portfolio. That means dollar cost average. You invest the same amount of money every single month into index funds. That way, you buy both high and low, and you get the average price. And you rebalance when your portfolio is out of whack. That's the idea. So everything stays, it stays balanced. Diversified, that's a smart way to invest. However, there is another strategy, which is a strategy that 30% of millennials out there are actually doing. And it basically means 50-50. I put 50% into stocks, which might be, for example, complete duds, because by the way, the average stock picker makes around 3% a year, which is terrible, or like around 2.45%, I think it was, according to JP Morgan. But the answer is they make nothing. But if they are investing into boring stuff, like the index funds and so on for retirement, that's fine, 50% there. And the other 50% just into crypto. Now, back to that couple. So that means, for example, if this couple said, well, Tommy, instead of putting 5K just into crypto every single year, we're gonna do half and half, 2,500 over here and 2,500 over here. Now that means, for example, again, if in 5 years, crypto does blow up, what happens then is basically they'll have around $78 million. Not bad. But for example, if in 30 years from now, that didn't plan out, but they still have their common investments, they're gonna have a little bit over $8 million just by making 12% a year with their retirement accounts. And that's awesome. But one piece of warning I do wanna give is this, okay guys? For everyone that's doing this whole 50-50 thing, which is around 33% of us millennials, the idea is, guys, okay, back in 2008, before the whole crash happened, you might not know this, or you might not remember because you weren't really alive or anything like that crazy. But the idea is that a lot of people were making a lot of money in stocks, in real estate. The price of real estate was appreciating, meaning you had, imaginary money. The price of your stocks were basically appreciating also, meaning you had gains there. But if you have gains and something is working in the markets and in finance overall, it's not real until you realize it, okay? So it means if you got lucky gambling, okay, or you got lucky with Bitcoin or crypto, whatever it is, okay, and you never realized it when things were actually good, well, you run the risk that you actually might lose everything, because when 2008 happened, the market crashed. Real estate market crashed. So all those people that had money, they lost it because they never actually realized it. It means, for example, when I put money into Bitcoin, it was not an investment, it was an experiment. I consider something to be an investment when I'm able to analyze it, comprehend the intrinsic value to at least some type of estimate, and then fully kind of like protect my capital in some sense, okay? That means I'm able to do this over and over again, not with Bitcoin though. So when I put 500 bucks into it and I made I made like around $3,000, I took 2,500, sold it, yes sir, and I left $500 in there. That means I took my profit, but I also left the house with their money. So if it does do something, great, but if it doesn't, I'm fine. I really don't care. But that's the idea. Don't forget to realize your money. And I honestly think that a portfolio with 50% crypto, 50%, for example, into like retirement stuff, only makes sense and only works really when you make a lot of money. Like that couple makes around like 125K, but for the average person not making that much money in reality, and you're only investing 500 bucks per month, the answer is, guess what? You're gonna be in trouble if this doesn't play out, because you're gonna be missing out on a lot of potential gains on the safe side. But if you have a lot of money to invest, that's different. But I wouldn't recommend you do 50-50. It's just super risky in my opinion. Now, the last way to actually go ahead and invest into crypto is called the too smart to fail way. You guys remember, for example, when people said banks are too big to fail? The same thing here with too smart to fail. How does it work? What's the point here? The point is, guys, for example, you invest 10% or less of your money into crypto. This does two things, okay? It protects you from exposure. It means that if you lose 10% of your money, you're most likely not going to go homeless by tomorrow. Not gonna happen. And on top of that, if something does happen crazy, you also make a significant amount of money. That's the cool thing. But there's no way to fail. And there's also potentially a lot of gain if things do go your way. That's the idea. So whenever you hear, for example, YouTubers, for example, like Graham Stephan, last time I heard from one of his videos, he was working himself up to 5% as far as crypto, okay? So not really 10% or 50%, or like kind of seems, right? So it's kind of like you're limited. Your exposure is limited. So if things go wrong, you're not losing all your money. That's what you actually want. Too smart to fail. And also other YouTubers out there, they're most likely, none of them invest in over 20% of their money as far as the crypto, but I recommend 10%. And by the way, I right now, because I'm gonna be honest with you guys, I have invested into crypto, into Bitcoin, around there's a point there, 0.15% of my money, or my invested money, is invested into crypto, which is only like around 500 bucks. Do the math in reverse and you'll know exactly how much money I have overall in my investments. But overall, only that. If I lose that, do I care? Not really, because it's not going to send me down to the poorhouse, okay? That's the idea. So overall, if you ask me, Tommy, which method is best, the first thing I recommend is understand what you're doing is most likely gambling. If you hit, you hit, and if you don't hit, you don't hit. And the big thing is right now, you have FOMO, fear of missing out, and you don't want to miss out, because if you miss out, you're like, damn, I could have made some money there. So if it does work out, and if it is as big as it is, by limiting yourself to only 10%, you'll get a big chunk of all those gains, obviously. But if it doesn't work out, you'll still be okay. So I recommend invest 90% of your money into those boring things. Trust me, the boring things work. And there's no way to predict the market, no way. But there is a way to kind of track the market from past experience. We have 50 to 100 years of, for example, a track record. So instead of buying one stock, buy 500. S&P 500, okay? That's an index fund. Instead of buying, for example, one international stock, buy all of them, okay? That's VEA. So invest into index funds. Invest into ETFs. That's what I do, and that's what I recommend. But overall, comment down below and let me know exactly how much money do you have invested as a percentage of your entire portfolio in Bitcoin. Is it 10%, 20%, 50%, or are you all in? Comment down below, let me know. I'll see you guys next time. Thanks for watching. As always, like, subscribe, hit the bell so you're notified. If you want to talk to me one-on-one, well, you're welcome to do so. I have a link down below. You can actually call me or send me a DM on Instagram at TommyBryson, and I will answer your DM as fast as possible. And up here is another video, and over here is my face. Click it. And long-term team, out. And by the way, before I go, nothing else. I'll leave it at that, okay? Funko. I hope you guys like that example.